Hey YouTubers, welcome to Everyday Finance. I'm your host, Bobby. If this is your first time on the channel, be sure to smash that like, subscribe, and the notification bell so that you'll get updates on future content and videos similar to what you'll see in today's video. In today's video, I'm going to talk to you guys about car buying, about financing versus leasing. What is the best option for you? What's the pros and cons of each as well? So let's go ahead and jump right into it. So you've decided to pursue a new car. Congratulations on that. First and foremost, let's set the table for you. Whether you're searching online or you're doing so at a dealership in person, you'll want to make sure that your credit is in the best shape possible. The higher the better. It'll lead to lower interest rates and lower payments for you as well. Here's a pro tip for you guys. Never, and I mean never, allow dealerships to shop your credit around for financing. You don't want to do this because it'll create several hard inquiries on your credit report. This will lead to a drastically lower score whether or not you get the car. So don't allow them to do it. Let's talk about financing first, as it's the most widely used and well-known form of car ownership. Now, when you go to a dealership, if you don't know the price of the car that you're pursuing, you'll see it on the sticker right there on the vehicle. If you do, you've either looked at it online or you noticed it there in the dealership. Shortly after, you're likely to be approached by a sales rep who will likely try to sell you on the upside or coolness of the vehicle. Here's the meat and potatoes. You sit down with the sales rep and you talk numbers. You want to be an active participant within these discussions. You don't want to allow these guys to just run numbers on you or tell you what your payments are going to be or what your interest rates and things of that nature are going to be. You want to be active and tell them what the numbers have to be for you in order to get the sale or the deal done. These guys are smooth operators. This isn't their first rodeo. These guys have sold cars to multiple people, if not more than that. If you're not an active participant, you'll find yourself trapped within terms of a car that you either can't afford or that you don't agree with. Become an active participant in these talks. Make sure it's within the scope of what you want with regards to the overall amount for the car, as well as the interest rates and payment amounts as well. The first thing you'll want to understand is how long you want to finance the vehicle for. Vehicle financing has changed over the last 20 years. And even closer, the last 10 years. According to Experian, as of 2019, the average car financing term was 70 months or 6 years. Financing terms today can run as long as 84 months. Understanding how long you have to pay for a vehicle is important because you may also have to forecast other large expenses that you have during those terms. An example of that would be a wedding, school expenses, a baby, marriage, things of that nature. Large expenses that can happen, say 2 or 3 years from now. 7 years, no one can really tell what's going to happen to their life or with their life. So you'll want to take these things into account when determining how long you want to pay for a vehicle. The interest rate tends to go unnoticed with most buyers. The interest rate is the rate that you're being charged to borrow or finance the vehicle based on the car's overall price. Let's say that you're financing a car that's $20K and you have okay credit and are financing at an interest rate of 6%. This means that your first payment will include interest of $100 or $20K times 6% per year divided by 12 months. Don't let the math make this seem complicated. It's not. Depending on your monthly payment amount, you know that $100 of that is going towards interest and the rest is going towards your principal. This can be confusing at first. With my first car, I never could understand how I would pay a large amount and then the balance would still be higher than the amount that I paid. But it's because of interest. Also, most auto loans are top heavy. What that means is that the majority of the interest is carried at the beginning of the loan as opposed to the back end, because people are more likely to default on a loan near the the end of its terms as opposed to the beginning of it. As your loan balance decreases, so does the amount of interest that you have to pay on it. Eventually, all of your payments will go towards the principal and the loan will be paid off. With that being said, let's talk about the pros and cons of financing to give you a better picture of what's better for you, financing or leasing. Let's talk about the pros first. First and foremost, ownership. When you finance a car and complete the paperwork, there's this feeling that the car is yours. If you decide tomorrow you want to trade it for something different, you can. You want to move the car to another country, you can do it. Ownership is a huge perk and a reason why many people finance vehicles. Payment monthly terms. Regardless of how much your car costs, having more time to pay for it is a perk. Imagine a car costing $10K and having to pay it off in a year. With just payments alone, that's $833 a month. Now imagine the same $10K car and having 7 years to pay it off. That's a payment of $119 a month. Huge difference, right? These terms make what seem like larger amounts affordable over longer terms. Collateral. Okay, so stay with me here. If you fill out an application for a large loan or a home, you understand how collateral works and how vehicles can be leveraged. As with anything good, negatives exist as well. So let's talk about the cons of financing. The biggest drawback of financing are huge monthly payments. Depending on the cost of your vehicle, payments can range from a few $100s to several $1,000s. Sometimes they can be even higher if you decide you want to get into the ultra luxury range of vehicles. That's a ton of cash to pay out every month just to own a vehicle. Leasing beats financing here as the monthly payments are significantly lower. Depreciating asset. The second you drive your car off the lot, it starts depreciating. Cars are one of the worst investments for this reason. Based on a Kelley Blue Book survey in 2020, cars depreciate at a rate of 15 to 20% per year. This means that your 20K car will be worth $16,000 in 12 months, but you'll still be paying for it as if it's worth the same 20K. This is something to keep in mind when purchasing a vehicle, as some cars depreciate even faster. If you're interested in depreciation rates, you want to be sure to check online registries for older variations of the car that you want so that you can understand how fast and how far the depreciation for that vehicle is. Now that we've talked about financing, as well as the pros and cons of it, let's get into leasing. Leasing, in terms of car buying, it's been given a bad name. Gone are the times where a lease was the worst option for a buyer with no credit and just looking to get into a car. Car leases are now more broad and better suited for more people within the car market. Car leases are essentially written contracts that allow you to possess a vehicle for specific months, given that you can stay within certain thresholds when it comes to mileage as well as wear and tear on a vehicle. Notice that I said possess and not own a vehicle, because with the lease, you have to return a vehicle at the end of the lease terms. Some leases allow you to finance a vehicle before the lease term ends, but by doing so, you'll cost yourself a penalty. Outside of that, the only option that you'll have with financing is after the completion of the lease terms. Leasing requires better credit, and here's why. The lease for the car is shorter terms than financing. And with that, the creditors are going to want the highest or most credit-worthy buyers to obtain their vehicles. Think about it in terms of this. When financing a vehicle, you can have terrible credit. Terrible credit usually means higher interest rates, and it means higher payments for people. But with financing, those people can set terms, meaning how many months they want to finance the vehicle, a longer amount of time, therefore decreasing or diminishing those payments as much as possible. With leases, the terms are much shorter, usually 36 months, or in some cases 4 years if they choose that option. With those shorter terms, you have to have better credit or be more credit worthy. Otherwise, the lease won't work for you. Now that we've talked a bit about leases, let's talk about the pros and cons of them. We'll talk about the pros first. And the first pro is spending less money. Spending less money. Most leases don't require down payments the same way financing a car can. This alone makes it a viable option for those looking for a new vehicle. In addition, monthly payments are less than you encounter with financing as well. Asset versus liability. With buying a car or financing a car, you immediately lose money to depreciation. Leasing is a bit different. With leases, you only pay for the depreciation of the vehicle. With this in mind, financing a vehicle makes a car a liability. Leasing a car makes it an asset. Always having a new car. If you're a person that's into the newest tech, the newest gadgets, the newest looking vehicle, or the flashiest vehicle that's out there, leasing will be great for you, as you can continue to cycle through those vehicles every 3 to 4 years with leasing terms. Renting versus owning. One drawback of a lease is that if you don't decide to finance the vehicle at the end of the lease terms, then you basically been renting the car for 3 or 4 years and have nothing to show for all the payments that you've made, versus being close or near the end of the financing if you had financed the vehicle. Limitations. Another drawback of leases are the limitations that are set on you with mileage and wear and tear with the vehicle. The days of just getting in your car and riding will be behind you. You will have to be more specific about when you want to take trips, where you're going, and how many miles you'll encounter during that driving session, as you have very specific mileage limitations with a lease. In addition to that, leasing is not the best option for someone who's looking for a primary vehicle. The reason for that is because there's a lot of sporadic driving that's involved with having a primary vehicle. If you aren't able to control the amount of mileage that you place on the vehicle, then you'll be paying penalties for going outside or using excessive mileage with a lease. Ownership. People will say that a drawback of leasing is that you don't actually own the car. But technically, with financing, you don't own the car either until you've completed all of the payments. So with that in mind, what's the better option, leasing or financing? The honest answer is, it depends. I know a lot of people don't want to hear that. They want to hear something more specific. But the question must be asked, what is the intent of your use with the vehicle? That will determine what's the better option for you. If you're looking for a vehicle that you can just get in and do whatever you want with, financing is the better option for you. If you're looking for a vehicle that can make you money back, it may be a lease. If you're looking for a vehicle just for right now and you may want something, say in 2 years or 3 years, leasing may be the better option. If you don't want to be constrained with regards to mileage or wear and tear of a vehicle, financing may be the better option. Regardless of what option you choose, the information for both have been outlined so that you can make the best decision for you specifically. I truly hope that this content is giving you some insight into financing and leasing and the pros and cons of both. If it has, be sure to smash that like, subscribe, and the notification bell so that you can be given updates on future content and videos similar to what you saw in today's video. And always remember, guys, there is no goal that is unobtainable when you apply everyday finance. I'll see you guys in the next video.